Let's talk about the revenue drop, first of all, to get it out of the way, because it was worse than the street was expecting, and it's been a constant problem for Deutsche Bank. What do you need to do to turn that around?
So I'd say the results were in line with the street's expectations, certainly informed by the context, as we've seen through our peers' earnings reports, that the industry faced in the fourth quarter. And with that in-line performance, we weren't able, as we'd hoped, to stabilize revenues on a relative basis. But being down 2% year on year, in light of the backdrop that was the industry's backdrop, and frankly, some of the idiosyncratic stresses that we faced, we thought was reasonable for performance. We continue to work now on the stabilization and growth of our revenues. We think we've built a lot in terms of foundational improvements in the company that will carry over to 2019.
The whole street saw a drop in trading revenues, but Deutsche Bank had specific issues, the raids, for example, in the quarter. How much of the drop do you think was the industry, and how much of the drop was Deutsche Bank specific?
Well, I'd say two things. One is in terms of business mix. We're obviously a leading rates and also a leading credit house. And those two areas were among the most affected in the market sort of action in the fourth quarter. The raid did absolutely impact our business, especially in December. It's always hard to measure how much, but clearly being in the headlines in that way is unhelpful to client confidence. We've, I think, gone some way to restoring that and stabilizing again, as reflected perhaps in CDS spreads and our credit spreads. That's encouraging, but I think there's more work to do to communicate the nature of these issues and how we want to resolve them.
How much has the Danske Bank issue affected you, and how much do you expect it to cost this year?
Well, it's in the papers a lot, and of course, again, that affects both employee and client confidence around the name. We're seeking to put it behind us as quickly as possible by explaining our perspective of the facts, cooperating, of course, with all inquiries that are out there. But as we've said a number of times in the public, as we look at the fact pattern and research, our engagement with the Danske Estonia branch, we see Deutsche Bank acting responsibly against its obligations as a correspondent bank. And we hope that as the authorities go through in their inquiries, they'll see that fact pattern as we do. We have not incremented our legal reserves or our contingent liability, probably the best reflection of our financial, if you like, and accounting view of the risks attached to these matters in the fourth quarter. And that's intended to signal something about how we see the fact patterns and what our reviews tell us.
Have you been contacted by the Commission in regards to a new sovereign bond collusion probe?
We have not.
You have not, so you're not one of the banks that the European Union is looking at?
We have not been contacted by the Commission.
Okay. Cost cuts were better than expected, and indeed you are raising basically your target for cost cuts in 2019. Is that difficult to do at the same time as you're trying to boost revenue?
That's clearly been the market's concern, and why it is that we went through the reshaping in CIB, but also we achieved some notable strategic milestones in our asset management DWS and also in our personal and commercial banking business in 2018. It was a year of tremendous transition change in the organization, which again is part of the foundation that we feel very optimistic about as it carries us into 2019. So we've made enormous progress, and we feel confident about that. We have moved away, essentially completed the reshaping as it impacts our front office staff, as it impacts clients. And at this point, we will continue to work to drive efficiencies in our platform. Absolutely, that'll be a multi-year effort. And we think it's there now that we can bring the €1 billion of additional savings to the bottom line, as we've announced, and in line with our downwardly revised target.
You boosted revenue in the global transaction bank, 5%, I think. The private and commercial bank was up
2%.
2%. Mm-hmm. Is the mix solid now, or are there still areas that you want to tweak?
No, we think the mix is solid. We've talked about growing stable businesses. We have excellent businesses that represented well over half of our revenues, particularly PCB, private commercial banking, which grew strongly in Germany particularly, but also in our international franchise. And global transaction banking, which, as you say, grew 5% year on year in the fourth quarter. We see momentum in those businesses, among other things, incidentally, in loan growth. we had significant loan growth of a little bit over 20 billion euros in the year. And of course, loan growth is a leading indicator for future revenues and an indicator of the health of the franchise in those businesses.
Germany has cut, the government has cut its outlook for the economy this year in half. Is that a concern to you, the economic slowdown that we're seeing in Europe?
We don't see signs of a recession. Frankly, we see signs of bottlenecks in certain instances in terms of the ability to hire staff. We don't see sort of a drop in the order books. So yes, the external stats in terms of business confidence and economic growth have slowed in the second half of the year. But we still see fundamental strength in the economy, admittedly at a lower level of economic growth in terms of the outlook than we had in 2018.
How much pressure do you feel from the German government to show them targets or go into merger talks?
We feel we're in control of our destiny. We're executing against our plans. We're proud of having achieved the milestones we did in 2018, whether it's the actions we took around the businesses or frankly achieving financial milestones that we promised the market. We intend to do the same in 2019. Leverage all the work that we've done with the businesses, stability in the platform, serving clients, executing on our strategy. I think all of the stakeholders around us should see us execute on that, and that puts us in control of our destiny.
Is there some strategic help, you think, that merging with another bank would offer you in terms of raising revenue?
So I'm not going to comment on specific items. We have talked, if you like, and there's a lot of talk in the sector overall, that over time, mergers, consolidation in the European banking sector would be sensible for a variety of reasons. And so we've tended to agree with that. What form it takes, how long it takes to do, is kind of anybody's guess at this point in time.
Previously, Deutsche Bank has said no merger talk really until 2020. Is that still the line, or could you foresee a merger situation happening before that?
Well, we've been clear that we have homework and that we've been executing on that homework. We think we see evidence of that. We want to continue to deliver evidence of that in 19.
But could you rule out a merger this year?
I'm not going to comment on specific mergers. I think I've answered the question about our general view of consolidation. And again, we're focused internally on executing on our plans. We'll talk to investors about those plans today, and then demonstrate our progress over time. What
about the external issues? I mean, there are many, including trade. We've talked about the European economy and, of course, Brexit. How much of a difficult variable are those offering? Well, as financial institutions, we operate in the environment, whether it's the financial markets, as you asked about, the underlying economy, working with clients to support their businesses. So natural, and by the way, the interest rate environment as well. Naturally, we swim in those tides. We need to adapt our strategy and adapt our business models to reflect the environment, the opportunities, as well as the challenges that the environment throws up. We've been working through that. For sure, it hasn't been easy. I would cite the interest rate environment on a relative basis when you're paying for cash that's deposited at your central bank versus earning on it. It's a huge competitive difference between being a euro bank and a dollar bank. But it's part of our environment, something we work through, and hopefully we'll be able to overcome over time. Do you expect the interest rate environment to improve substantially this year? I'd like to see it improve. The most recent commentary has been essentially a lower for longer message, which obviously for the banking sector is not helpful. Whether that persists or not will depend on the trends in the underlying economy. Our own view is, as some of our research had recently pointed out, that there would be some benefits to tweaking monetary policy because it isn't clear to us that the costs imposed on the banking industry necessarily have as beneficial impact as perhaps monetary policy would like to expect on the economy out there. In terms of Brexit, how much of your balance sheet and employment base have you moved out as a result of the possibility of a hard Brexit? Well, I think importantly what I should say is we are prepared and preparing for any eventuality, including obviously in the downside case, a hard Brexit. And the industry has been preparing to avoid disruptions in the financial markets associated with that. We're confident we've made tremendous progress in that and are continuing our preparations.
to be ready. It's naturally a feature in the marketplace. We'd like to see resolution and more confidence come to the market, or more stability, if you like, around that current uncertainty. But we're prepared to support our clients.
You seem to be getting a vote of confidence from a major shareholder. The Qataris want to put more money, entrust you with more of their money. Can you tell us any details about how much they'll own?
No, can't tell you really any details. We clearly welcome new shareholders and people who believe in our story and are committed to investing in Deutsche Bank over the long term. But in respect of specific investors, I won't, or potential investors, I won't comment.
How difficult is it, though, to have a share price down 50% over a year? I mean, as a chief financial officer, how hard does that make your job?
It's, it feeds, if you like, perception around the company, and that is what I'd like to change the most. We're at a time when, strangely, I think the external perception, in part informed by securities prices, to my mind, there's a very wide gap between that perception and the internal reality that we see. The internal reality is of a company that is executing on its plans, delivering on its commitments, making enormous progress, both in the businesses themselves and how we're positioning them strategically, and in the control, the technology environment, the regulatory remediation glide path that we've set out for ourselves. So if we look back on 2018 and all of that distance traveled, the fact that it was also a year in which we suffered, setbacks, and our securities prices traded as they did, that's a frustration to us. We think that as we demonstrate progress on the plans that we've articulated, hopefully that'll start to heal, and the perception will come in closer to the reality that we see as a management team.
So let me finally ask you about talent then. It's, I'm sure, as important as shareholders at this point for you. When you see a young banker or graduate and you want to get her or him to come and work for you, what's your pitch?
Yeah, well, I'd say two things, by the way, just as a point of information. Attrition ticked up last year, but only slightly, call it by a percentage point in the business overall. In a couple of pockets, there was a little more, and that's something that we're focused on managing. But it's far cry from, again, the external perception of talent drain at Deutsche. We continue to have very, very talented people. And so the pitch, I'd tell you, is you'd have the opportunity to come and work with those talented people, those talented colleagues. I think we're unique among continental banks in terms of, and Eurozone banks, in terms of the things that we do, the intellectual property that's in this company, the career opportunity, the clients you work with, the transactions that you get involved with, an international career in banking. That's something on a European platform is something quite unique that we offer. And we're proud of that. There's a lot to encourage graduates. By the way, in our graduate program of last year, we had, I think, a record level of applicants and a highly qualified, highly talented group of young people coming into the company. Again, distance between perception and reality, the young people that we see coming into Deutsche Bank are remarkable people.